Southeast Asia is betting big on fossil gas. Since 2021, over 100 new oil and gas blocks have been offered across the region. Governments in Indonesia, Malaysia, Vietnam, and beyond are pitching domestic extraction as the solution to post-pandemic recovery and energy security. But according to Global Energy Monitor's latest brief, the region's gas drive may carry more risk than reward. Indonesia and Malaysia are leading the charge, together making up over 60% of planned gas extraction in the region. But the pace of development is uneven. While auctions multiply, final investment decisions are lagging. Of the 34 gas fields expected online since 2020, less than half, just 16, are operational today. Delays are the new normal. This growing implementation gap reveals deeper issues: slow permitting, inadequate infrastructure, and tightening finance. The Philippines' upstream gas projects are falling behind, even as LNG import terminals race ahead. Thailand and Vietnam face a similar mismatch. Gas is central to their energy plans, but progress on extraction is limited. As demand grows and timelines slip, countries risk overcapacity and stranded assets. Globally, the case for fossil gas is weakening. Demand is softening. New LNG projects are oversupplying the market, and prices remain volatile. Meanwhile, renewables are cheaper than ever. Solar, wind, and battery storage are scaling rapidly across Asia-Pacific. Leaning too heavily on gas now could lock Southeast Asia into high-emission, outdated infrastructure. If countries are serious about limiting warming to 1.5 degrees Celsius, fossil gas use must decline this decade. Yet in Southeast Asia, governments continue prioritizing gas expansion, especially offshore, despite long-term climate risks. Implementation remains weak. Regulatory systems are fragmented, transparency is low, and pledges are not translating into action. The financial landscape is also shifting. Global institutions are pulling back from fossil fuel investments, and gas is losing its bankability. Instead of ensuring energy security, new gas projects risk becoming costly liabilities, just as renewables become more competitive and scalable. Global Energy Monitor's brief calls for a strategic rethink. Energy resilience doesn't have to come from extraction. It can be built through cross-border grid integration, investment in renewables, and stronger efficiency measures. Southeast Asia must now decide, will it invest in the energy of the future or prolong dependence on the past? The region's decisions over the next 5 years will help shape the global energy transition.